This is Japanese Economic Review Channel. Welcome to yesterday's market briefing for June 24th, 2026. Yesterday, the Tokyo market faced a challenging session, heavily influenced by overnight volatility in the US markets. We will examine how a global tech sell-off intersected with domestic sector rotations and emerging corporate strategies to shape the day's narrative. Looking at the closing figures, the Nikkei 225 fell 613 points to finish at 69,174, while the Topix dropped 26 points to 3,963. Market breadth was negative, with 826 declines against 678 advances. In the currency markets, the yen weakened slightly, trading at 161.73 against the dollar. This broad pullback reflects a cautious stance following significant tech-led gains in previous sessions. The intraday chart reveals a volatile journey. We opened weak due to futures-led selling and reached a significant trough at 1:26 p.m., with the Nikkei dropping 1,327 points to 68,461. However, a late afternoon recovery in the South Korean KOSPI acted as a catalyst, triggering short-term rebound buying. This regional synergy helped arrest the decline, though the market remained weak toward the close. The primary drag came from Wall Street. The Nasdaq plunged nearly 580 points as FRB rate hike fears sparked heavy profit-taking in AI and semiconductor giants like SanDisk, Micron, and ARM Holdings. Notably, the Dow Jones saw a major reconstitution, with Alphabet replacing Verizon. This US tech correction served as the primary anchor weight for Tokyo's morning session. We observed a sharp contrast across the 33 sectors. Financials and energy faced severe headwinds, with major banks like Mitsubishi UFJ and resource companies like INPEX sliding. Conversely, investors sought safety in a, quote, defensive pivot, driving gains in pharmaceuticals such as Takeda and Astellas, and air transport leaders like JAL and ANA. This rotation highlights a clear shift from cyclical to stable assets. The TSE Growth 250 Index succumbed to broader macro sentiment in the afternoon session. While heavyweights like Genda and Cover were dragged down, the IPO segment remained a hotspot for momentum. Nikkei X hit a consecutive limit up, and Geo saw a sharp rebound. Stocks like Tiny and Trial Holdings also showed resilience, proving that individual narratives can thrive even in a down market. Beyond macro noise, corporate Japan remains active in long-term growth. TEPCO and Daiwa House partnered for grid storage power stations, while Tekken began AI trials for construction efficiency. We also saw consumer innovations such as Oriental Land's skin-correcting lenses. Furthermore, Nippon Steel's titanium was selected for a national scenic garden, showcasing a diverse range of material actions. In summary, today's market was defined by three themes: macro pressure from the US tech sell-off, intraday resilience supported by regional neighbors, and a distinct defensive pivot domestically. While tech volatility remains a hurdle, the concentrated buying in pharma and travel suggests that the underlying appetite for quality and stability remains intact. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.